Last week, you had a very interesting interview at the American Economics Association with your two predecessors. And at that interview, you seemed to say that the Fed's position going forward is that you're reasonably comfortable where you are with the Fed funds rate. Is that the proper interpretation, or should people be reading more into what you said last week?
So maybe I'll provide a little bit of context there. So 2018 was a very good year for the U.S. economy. It's the strongest growth we've had in more than a decade. By so many measures, the labor market is very strong, historically low unemployment, the lowest in 50 years, wages going up, labor force participation going up, which is very important for us, and inflation staying right near our target. And we see continued momentum from the data right through the beginning of this year. We also see, though, the financial markets expressing a view of concern about downside risks really associated with global growth and with trade. So how do we put those two different signals together? And I think we're actually in a good place. I think where that leaves us, particularly with inflation low and under control, is we have the ability to be patient and watch patiently and carefully as we see the economy evolve and figure out which of these two narratives is going to be the story of 2019.
Okay, but at the end of last year, in December, people thought that perhaps 2 Fed fund rates increases in 2019 were part of your plan. Is it fair to say that that is not part of your plan right now, today?
I think the better way to think about it is that there is no such plan. We don't actually vote on a path or a plan for interest rates. We have each individual participant on the FOMC submits his or her individual projections 4 times a year, and we did that in December, and 2 rate increases was the median. And it was conditional on a very strong outlook for 2019, an outlook which may still happen. But the good thing is we're in a place where we can be patient and flexible and wait and see what does evolve. And I think for the meantime, we're waiting and watching.
All right, so I shouldn't anticipate at your next FOMC meeting a big increase in interest rates.
You should anticipate that we're going to be patient and watching.
Okay, all right, well.
And waiting and seeing.
I have no doubt. Okay.